Hey everybody, Tom Gentile. Welcome to the podcast again. Here we go. It is now the middle of June. We are here at Profit Strategies Podcast, week ending 6/18/21. Glad to have you here with us today. Today, we're going to take a little bit of a sideways turn to what we typically do on these podcasts. As you know, typically to my right is Chris Johnson. This week, however, either Chris got a extremely younger or we've got someone completely different on the podcast. Today, I got Jack Rosenthal on the program with me. Jack is a young investor. He is a teenager. He's only 18 years old, yet he's now written a couple of books on teen investing. He also runs the Young Investors Club at younginvestors.org. He's got the number 2 best-selling book going on Amazon when it comes to teen investing, and much, much more. We're going to get into all of this right now on our podcast. So, Jack, it's exciting to have you on the program here, buddy.
Thanks so much for having me on. I'm still convinced I'm just the younger version of your partner. I'm not actually Jack Rosenthal. I don't know if he was this good looking when he was younger. Who knows?
You know what? He has a lot less hair than you. So I would probably say no. You're probably the best looking guy we've got on this program so far.
All right.
And I'm not even going to exclude myself from that. But
I'll take it.
It's exciting to have you on here. You know, I have children. They are a little bit older than you. They're out of college. It's funny because you know, when you look at my kids, they're very, you know, they're privileged in so much that they know what I do. They hear it every day. So they're getting a different spiel of information on a daily basis than, say, someone who goes to work for a living and comes home and downloads their day of what they did at their office or what they did on the job. My kids are ingrained in investing all the time. So really, you know, I mean, if I were to just grab a couple of questions, I think that are the most pertinent for this interview. What's it like being an 18-year-old investor in this era where, you know, you don't see a lot of people? I mean, I know on my channel, when I look at my channel analytics, now I'm 55 years old, you know, so I know what crowd I'm attracting, and it's not the 18-year-olds. It's 45 and older represents almost half my audience. But then when you get down below between 35 and 45, it's a smaller slice, 25 to 35, smaller slice. 18 to 25, I'd say if I'm cracking 2% of that audience, I'm lucky. What's it like for you in this era?
Okay. All right. So what is it like being an 18-year-old investor and entrepreneur? Well, first of all, the main thing is when I was 17, 16, you had to deal with school. So that was probably the biggest kind of difference between being an everyday adult and being an investor and entrepreneur versus being a young person and being a young entrepreneur. So that's probably the biggest thing. Other than that, not too different. I mean, what's so great about it is when you were younger, you were my age, and the reason why a lot of people weren't young investors when they were your age is because the internet didn't really exist, or it was very complicated to find information. Now information has been made so accessible through people's like your YouTube channel, I have a YouTube channel too, and millions of other people have YouTube channels, not to mention there's thousands just on the topic of investing. So between all of that, there's tons of information out there to educate, you know, young viewers. I have a book on investing, teen investing. So there's a ton of different information out there available to educate young people. And that's why you see so many more young people getting involved in it. As far as your channel, that's interesting that only 2% is 18 to 22. Oftentimes on finance channels, it's actually like different statistics. They're like 30 years old or something, the guy, and then most of their audience is that 18 to 22-year-old audience. There's a huge segment of that audience that not necessarily is investors, but really wants to learn about investing because they know it's going to be really applicable when, you know, they're a few years older or a lot older.
Well, I also think, you know, if I were to add a little bit to this, when I was 18, 19, 20, I wanted to be an investor. I wanted to be a trader. My parents would not co-sign for me on the account application, so I had to be 21 before I could do it myself. So I got it.
You're going to resonate with this story. I want to buy my first investment property, but my parents won't co-sign on the loan either. So,
and that's actually less
for your 19-year-old self. I know it's very nice. I'm trying to convince them. I don't know what's the matter with them. They own a home. I'm like, Dad, you already know what you don't know. You already own a home, okay? Like it's not going to go bankrupt here. It's backed by the asset. It's 80% loan to value or 75% loan to value. My dad's not in a position where he like is relying on that income or is relying on those. That's like his life savings. It's not his life savings. So
Yeah.
anyway, I'm trying to convince him too, but I can sympathize with your 19-year-old self.
Yeah, absolutely. I mean, there's that, and then of course, like you said, we don't have the type of media. We didn't have that back then. Back then when I started trading, we were trading in eights and quarters. I mean, we were bidding stocks. Call it Intel at 25 half by 25 three quarters, or 25 and three quarters by 26.
Wow.
And so, I mean, things that I had to suffer through trying to be a retail trader. It's kind of like it's like every generation. We always say we had it harder than you did, and my grandparents or my grandparents said the same thing to me. But you know what? We're all right because
I believe it. Yeah, no, I believe it.
The numbers speak for themselves. I mean, in transportation, in technology, I mean, you name it, things have just have just advanced so much. And in the world of trading and investing, we now have all these social circles we can go to. We have our channels, YouTube channels we can go to for education. We have platforms that are above and beyond, much farther along than they were before. When I was picking up a phone that had a cord on the end of it to place orders. That's what I was doing when I started doing this. I was at Home Depot. I was working in the plumbing department. And I remember picking up the call, getting an outside line because I needed to buy something. That I remember to this day, and how hard it was because it took minutes to get on the phone, get to the account executive, get to my account executive, place the order, stay on hold, look around, see if anybody needed any help with something, if they needed a faucet or a toilet or whatever, and then get my my confirmation and then hang up the phone. It was hard back then. Now it's just a matter of you could click, you could swipe, you're in, you're out. It's so much more transparent than it was back then. So, it's exciting to see that you're starting this at 18, but my next question is, how did you get started investing at such a young age? I mean, I know how I started it, but
Yep.
I want to know how you did.
So my grandfather was a commodities trader back in his day. He was an immigrant. He really had it hard. You think it's like everyone's got the next level. It's like, you're here, he's here. I got it the easiest. So he had it the hardest. He came to the country. I think he spoke English, but anyway, yeah, he came to the country brand new when he was a very young man, and he became a commodities trader eventually became a very good one. And then when I was 8 years old, he set up a stock portfolio for me. He did it for both me and my brother. My brother had no interest in investing at all. And, a lot of times parents set up early on investment accounts for their kids. So he's pretty much had the same idea to do for me and my brother. However, he said with me, because he knew I had some interest in investing at the time, he said, you have the opportunity or you have the option to self-direct this. So you can decide what kinds of investments you want to go in. For your brother, I'm just going to put it all in the S&P 500. But for you, you can decide. So that's really when I got my first little taste of investing, and I've been investing ever since then. Interesting story I always like to share is in that first year of investing, I actually got a bad return. My brother was up like 10% or something that year because the S&P did well. I chose some small stocks. I was 8-year-old. I thought I was a genius. I chose 16 different stocks, and then overall my return was negative 4% or something that year. So not a good return that year, but I learned a lot of lessons from that of what not to do. And then in the next year, I ended up making money in all the other subsequent years after that. But anyway, good little lesson I learned when I was 8 years old.
So let's talk about your portfolio right now. What are you currently invested in?
I should pull it up. Okay, so I own some Blackstone. I've owned that one for a while. I own some Upwork. Upwork is very cool. I'm big. I think they got a lot of room to grow. They're up, I think, 200% or something this year. What else do I own? Amazon. Always been a believer in Amazon, but I owned them back a little while ago. And yeah, a Berkshire Hathaway.
Okay, so you really are in the big cap, big name.
I like big cap. That's the lesson I learned when I was 8 years old. I'm the small cap game, it's for risk. It's definitely for riskier investors. You need to spend a lot of time researching. And I don't know, I've just always had more success with big caps. So I kind of hung out in that world ever since. And it's done really well for me for the last 10 years.
What do you think, before we get into your book called Teen Investing, what do you think about all these young traders who are coming in trading the meme stocks like GameStop,
Yeah, I mean
AMC,
it's very fun.
Dogecoin? I mean, that
Yeah,
seems to be where everybody that's south of 25 is getting indoctrinated into this business. What's your thought?
yeah, yeah, totally. By the way, first of all, before I forgot to mention it, my book is Teen Investing on Amazon. I know we keep referencing it, but you can go get it on Amazon, Teen Investing, Jack Rosenthal. And I have a YouTube channel too. My name is Jimmy Duke on YouTube. I go by a different name on YouTube.
Okay.
Jimmy Duke. Anyway, yeah, so to answer your question, so I got a little brother. He's actually a trader of Dogecoin, and he's one of those millions of minions who are out there pumping up these stocks. And it's obviously kind of feeds on itself because they see it on the news, they see their friends are doing it, and then they kind of get it on it.
Yeah.
More friends are doing it. It's just kind of like a self-fulfilling cycle. I mean, it's interesting. I think it's kind of like people kind of equate it to like this giant, like, oh, it's like the little guys taken back. Like, I think it's kind of a trend at the moment. Like, just like entrepreneurship was a trend a few years ago, and like everyone wanted to get into that. And then now the trend is like Robinhood and investing for young people. It's a good trend. It'll probably overall help a lot of people in the long run. But as far as like pumping up these like stocks like GameStop, which I think was like going bankrupt or something, and then everyone's like, oh, let's go in and buy the shares. And I think what do they call it? Squeeze the short position or something like that, where they made the stock go even higher. All of that stuff I think is trendy. It's in the moment, but I don't think it'll last like longer than 5 years.
Right. I look at this and I think about the dot-com days back in the year 2000 when everything was going up. That was .com, pets.com. Now the big idea is seeing if you can find the old stock certificate to some of these things on eBay because they're now worth more than the shares were. In fact, they're collector's items. That's what a lot of the guys my age do. Is we look for some of those things. I've got hats. I'm a hat collector, cap collector, and I've got caps that say, Enron on them, and of companies that have since gone bust. The reason I have those is because it reminds me of what can happen, and I believe what's going to happen is maybe it's not going to happen tomorrow. Like you said, it might be a few years, but eventually something like inflation, something like there's going to be some sort of market event that's going to cause us to pull back. And that pullback could be 10%, 25%. Who knows? Who knows what it's going to be? But it's going to jack a lot of these people out of the business because they're going to see a 5x or 10x move to the downside, much greater than what you and I will see as long-term investors. I think that's the only problem. But you know what? Like you said, it's bringing a lot of new people into the environment. And if they can survive this first volatile move, that takes them out, and because it happened to me, 1987, the day after the stock market crashed, I was done. It took me a whole year to come back because I owed my broker money. And I decided in 1988, do I really want to do this or continue to pound myself and inflict financial pain, or do I want to learn how to do it correctly? I decided to learn how to do it correctly and haven't looked back. And there's going to be people that are going to come out of the ashes of the AMCs, GMEs, Dogecoins that I think are going to move forward. It's going to help them rather than hurt them because of youth.
Yep. Yeah, totally. I'm just finishing up on that note. I think it's great. It's bringing in a lot of young investors. And I think the biggest thing that I always say for young people, whenever someone's like, oh, what's your basic advice for a young person, is just like do long-term strategies. Don't try and do like the quick little fixes, Dogecoin, try and like day trade Dogecoin. Like you have no idea what you're doing. Like you're literally gambling in a casino. But like if you just buy and hold for the long run, strong companies like the ones I mentioned, like Amazon, like that's not going anywhere. Like forget about like all like the crypto and all the stuff that's on the news right now. Like think about what the actual company is. Amazon is the dominant marketplace for online retail. Someone needs to buy a hat like you, or when someone needs to buy a chair, or when someone needs to buy I'm just looking around, desk, a window, whatever. They sell everything on Amazon. Those are products. That's a business that people need. It's fulfilling customers' demands. Only online retail is only going to continue to expand. It's just like, it just seems like a no-brainer kind of idea, and a company that almost certainly will be worth much more in 30 years from now. So if you just hold it till then, you should be coming out okay, whatever the current price is today. So anyway, that's my general advice for young investors.
Awesome. So again, folks, joining me, Jack Rosenthal, 18 years old. This guy's a young investor, started the younginvestors.org group, has a couple books on Amazon. Teen Investing is your latest book, I believe here, or Teen Entrepreneurship, actually your latest book.
Yes, I wrote three actually.
Let's talk about. Yeah, let's talk about teen investing. So what prompted you to write this? What made you decide you needed to spill it all?
Yeah, totally. Okay, so now I can get into my whole story. Like, what is this kid? And whatever, I own some stocks, but so does every other kid in America now. What's different about me? So when I was 14 years old, I started something called the Young Investors Club. I started with just one member, me. The end of that year, basically, I'll tell you what it was first. So basically what it is each kid puts in $1,000 and we all invest the money collectively together in the stock market. And we kind of learn from each other, invest together. And it's just kind of a great way to meet other teenagers interested in investing and also just kind of grow all of our investment portfolios together. So by the end of that first year, my freshman year, when I was 14, I had got 20 members to join and we had about $20,000 in the investment portfolio. Then we got like a sponsor. We got a financial organization to sponsor us. They also helped with like legal and accounting, which was obviously very helpful. And if we had to pay for that ourselves, we would have spent the whole fund's money. So that was very helpful. We started doing annual meetings in their conference room. Anyway, fast forward to junior year, we had close to 40 members and $40,000 in assets in the group. And then at junior year, I decided I wanted to make the Young Investors Club the largest teen investing club in the country.
Wow.
And I went from 40 to close to 100 members at the end of that year and over $110,000 in assets in the group. Today, I think we're like at 125 or 130, something like that.
That's awesome. That's awesome.
And then anyway, so how the story we write in the book. So at the end of that, my senior year of high school, I always wanted a high schooler to be running the club because it was for teenagers, not for college students. So as I was going on to college the next year, I passed it off to a high school student to let them run the club while I was in college. And kind of the idea was like he was going to keep passing on year after year to a high school student. So I passed it on to a year, and kind of my final leaving gift to the club was writing the teen investing book, just a summary of all like the teachings and investing philosophies I picked up over the years. And I try to teach other teenagers. So I sent out the book for free to everyone in the club. And then I realized there's so much valuable information in there that could basically apply to any young investor interested in investing in the stock market. So I made the book available on Amazon, Teen Investing, Jack Rosenthal on Amazon for anyone who's got young kids out there. And since then, the book's done really well. And it's become it depends on the day, but it's either the number 1 or the number 2 best-selling book in the teen investing category on Amazon.
That's awesome. And folks, by the way, you can, if you just look straight down on the scrolling screen there, you can see Jack's name. You can actually just go to Amazon, type his name in, and it pops up right there, number 1 and number 2, right there as you do a search on his name on Amazon.com. Last question I got for you as we end the podcast is, what are we looking forward to with Jack Rosenthal?
I'd like to get into speaking. That's the next thing that I'm trying to do. I have no idea how.
You definitely got the voice for it.
I got some voice for it.
You got the voice for it.
About speaking is getting the bookings. As you'll learn from anyone who's a speaking person. So I'm trying to figure out how to get into the speaking engagements. Those are really great for, I think, kind of inspiring audiences, inspiring them in person. It obviously helps build my brand. It helps sell more books. So that's what I think that's the next step for me. But I don't really know exactly where.
Well, I am sure with some of your talent and caliber, it's not going to be hard to be finding you in various places in the upcoming months and years ahead. Jack, thank you so much for being part of the program. I appreciate it. And folks, that ends another week of Profit Strategies. Join me again next week. We'll have Chris back, and we'll be discussing all things market as we head into our next holiday, which will be coming up soon. 4th of July, we'll talk about holiday trading patterns, what looks good going into and out of the 4th of July. Of course, we'll have Chris's picks, my picks, and everything else that he wants to talk about as well. We'll see you then. Bye now.